Islamic finance in Kenya specifically, it's been around, 5 years, 6 years? And we have, therefore, a very nascent industry in that context. But nevertheless, a very important part of the tapestry of this country, not least because part of the population of this country are Muslims, but also because it opens up to banking and financial inclusion, a whole sector of our population that has not been hitherto catered for by the conventional banking system. And in that context, therefore, a very important provider of financial inclusion, which therefore leads to economic development, growth, poverty alleviation, as the theme of this conference states. But again, to contextualize that, very essential for us, having said that financial inclusion is very important for making an important part of our population to be included and become a stakeholder in the economy. That in itself also has got ramifications, obviously, for security and social stability. If you have any portion of a population in a country excluded, no amount of investing in security infrastructure will establish stability. What you need, therefore, is everyone to be a stakeholder in an economy. So that's how important, in my view, is that the introduction of Islamic finance into the country has been for financial inclusion, poverty alleviation, economic development, and security. To move away from that, why we are here as International Islamic Finance Conference in Africa, and with all the major participants from policymakers to regulators to captains of industry, as well as our dignitaries from abroad, development institutions included, is to realize and attest to the fact that Islamic finance provides one of the avenues for our country to access the capital it so much requires as a developing country to move forward. We've seen in the news the Eurobond, which is something we've done just recently, so it's not surprising that we're so excited about it and discuss it ad infinitum. But that's just a small piece of the country accessing capital resources for its economic development. And Islamic finance, therefore, is one other piece that it can tap into and should, in my view, given a few of other countries have already done in the continent. Not too many, but a few have done it, and there's no reason why we shouldn't. For many reasons. One is, obviously, it gives you a more diversified base of accessing finance beyond the traditional Western-based sources of capital. It also links up with an important part of our trading partners.
Ladies and gentlemen, the sustainability and attractiveness of Islamic finance as an alternative financing model in our current world continues to be recognized and appreciated by new regions and countries. Although the Middle East and Asia remain by far the largest Islamic financial markets in the world, other regions and countries are also pursuing Islamic finance as a new asset class. Its potential for growth and development in the future has triggered strong interest from beyond Islamic incumbents. Africa as a continent has been slow to take or attract Islamic finance at the same scale as the GCC, that's the Gulf Cooperation Council countries, Turkey or Malaysia. This is despite the significant real economy funding needs that are so well aligned to the non-interest funding structures of Islamic finance. Estimates suggest that the global market for Islamic financial services, as measured by the Sharia-compliant assets, has crossed the $2 trillion mark by now, a quantum leap from 150 billion in mid-1990s. Last year, the Sukuk markets witnessed a debut issuance from the governments of 4 non-Organization of Islamic Cooperation, OIC countries, and these are the UK, Hong Kong, Luxembourg, and South Africa, which indicates the growing popularity of Sukuk beyond the Muslim world. As these trends highlight, Islamic finance is neither a novelty nor is restricted to Muslim countries only. We in Kenya have ambitions of becoming the Islamic finance hub of East Africa and to seek leverage our comparative advantage in this niche market within the region. The country has access to a significant concentration of prospective consumers of Islamic financial products and services, as well as projects well suited to attract Islamic compliant financing streams within Eastern Africa. Given the availability of an established market infrastructure for conventional financing, Kenya is well placed to carve its position as one of the key players for providing Sharia-compliant services and products which appeal to anyone or any institution interested in ethical and socially responsible financing. The National Treasury is keen to ensure that the financial services sector is efficient and globally competitive. The growth of Islamic finance could play a significant role in the Kenyan economy, particularly in enhancing financial inclusion, providing alternative sources of finance, and creation of the Nairobi International Financial Center, which is one of our Vision 2030 flagship projects. From where I stand, I see 4 clear opportunities. 1, there is substantial scope for investment in infrastructure. The need for a modern infrastructure are immense, ranging from airports to power plants and dams to highways. These investments are invariably backed by tangible real assets and thus ideal candidates for Islamic finance. This same emphasis on asset-backed financing and risk-sharing features means that it could also provide support for small and medium-sized enterprise SMEs through joint ventures. Second, the world is increasingly recognizing the importance of investments that are socially responsible and environmentally sustainable. And given the commonality of foundation principle, Islamic finance can be a natural choice for socially responsible investments. Its risk-sharing features and prohibition of speculation suggest that Islamic finance may, in principle, pose less systemic risks than conventional finance. Third, in many developing countries, a majority of the public still remain substantially underserved by a formal financial system, if not entirely unbanked. Sharia-compliant finance, therefore, promises to foster greater financial inclusion, especially of large underserved Muslim populations in the marginal areas, adding to the wealth creation in the economy, and capital markets. Fourth, as a government, we are keenly exploring issuance of our own Sukuk bond as we seek to diversify our sources of finance. I think I've mentioned this previously in my statement on the budget, that we are very keen to issue a Sukuk bond. I think now this conference is very important for us as we share what it requires for us to proceed on this very important undertaking. Therefore, for this potential to be realized, however, and to allow this industry to develop in a safe and sound manner, a number of challenges needs to be addressed. And I believe this conference will be discussing some of these. These include the need for regulatory guidance, establishing Sharia-compliant liquidity management mechanisms, encouraging standardization of products and service offerings, enhancing consumer awareness, and addressing the lack of adequate technical capacity in the field. However, the challenges that we face are not unique to Kenya. They are common to any jurisdiction in its nascent stages of developing the sector.